bonds' next moves. I'm joined by market and data editor and yield next moves. I'm joined by market and data editor. Treasury yields pulling back a bit as investors digest another hotter than expected inflation print. Here with a look at what history tells us about bonds' next moves, I'm joined by market and data editor and host of Stocks in Translation, Jared Blickery. Hey, Jared.
Thank you, Maddie. We talk a lot about stock seasonality, at least I do, and I like to create stock seasonality maps for the entire year to give us kind of a flavor for when we might see some of the peaks and valleys. And guess what? We can do the same thing with the bond market, and we can do that with TLT. TLT is a 20-plus year iShares bond ETF, and here we are looking at 1 year. This is the median price chart pattern that we see since inception, and this goes all the way back to the early 2000s. 2003, in fact. And what's really interesting about this, and when I do the stock seasonality maps, usually we start over here at the bottom left and we kind of zigzag our way to the upper right. But this is much more of a mean reverting instrument. And in fact, we see some peaks that coincide with roughly the first of the month. So the beginning of the month, we tend to see these peaks. Here's February, we'll skip January. There's March, April, May, June, July, August, September, October. Might not be doing this perfectly, but November, December. It's not perfect, but it's really interesting because if you were to buy bonds, if you wanted to be a bond buyer and you were time agnostic, meaning you don't really care when you get in, the middle of the month would probably be a better time to buy bonds than the beginning or the end of the month. And in fact, now is a time probably when you would be in the very beginning of a short trade. So let me just show you how price action in TLT has evolved this year so far. We're only less than 2 months in, but I'll show you. And I'll trace it over here. This is in green. It's a little bit hard to see, but we already had this big spike up that already coincided with the 1st of February. So this seasonality is already playing out. And what we might expect is a decline into sometime into the middle of February, which arguably we're in right now, and then a rise into March. And it doesn't mean that history has to play out this way once more again, but those are the tendencies, all things being equal. So you can have a catalyst kind of throw a monkey in the wrench and change things, but if we were to revert to history, if things are in equilibrium, this is the tendency. So I'm going to close here with a longer term look at TLT. This is the year's price action. I'm going to put a max chart on so we can see all the way back to the beginning in 2003. And what's interesting, and we need to keep in mind that bonds are inverse to their yields. So we're seeing bond prices here trend higher over this very long-term time frame. Well, they have reversed that. And in fact, this is a reversal of a trend that began all the way in the 1980s. So I think the bottom line for investors is you probably want to be buying in the middle of the month, and you really want to be biased towards selling if you're a seller at the beginning or the middle of the month. Guys?